to another episode of the Bank Free Blueprint Podcast. Today I have with me Scott Carson. Welcome, Scott.
Hey, what's going on, Tom? Good to see you, bud.
Hey, you too. Thank you. Thank you for joining us. Scott, you are with We Close Notes. And obviously it's a note buying, note investing business. And you're located in Austin, Texas. You've been doing this for quite a few years now. How long have you been doing this business?
I've been buying distress or some facet of note investing, whether it's creating owner financing notes or buying distressed debt since 2008. Mm-hmm. So coming on almost 10 years now.
Yeah. Okay. And I think it was probably about 2011. I think when I went through one of your courses, and at that point, it was a live course. Now, since that time, you've switched a bit. I believe that you still do training, and like 4 times a year, but it's virtual training.
Yeah, I decided to beam up to the 21st century and start using things like this, Zoom and other webinars. I mean, we're doing webinars on a regular basis, mm-hmm. and was getting tired of the grind that comes with being an educator. Besides being an investor, traveling the country, teaching workshops. I started struggling a little bit in our portfolio. Things weren't, being kept on top of things. So mm-hmm. we stopped. We just said, let's try a virtual online workshop. We did that 2 years ago in August, and it was just so much easier, so much less hassle, so much easier for people from all across, not only the United States, but also international investors to join us. So we stopped that over 2 years ago, and it has been awesome. We see 200 plus people on a workshop, and then we also have a kind of a virtual convention twice a year that we've had over 700 people attend for 3 days. So we've used technology to travel less for work, stay home, get more of our deals done here, and really make it a win-win. Health-wise, it helps because I'm not traveling as much either.
Yeah, you're kidding.
But we've seen a lot more success with it.
Great. Little side question here, and that is, and we'll get certainly into the notes portion of it and distressed debt, all of that. But how did you make that transition from live events to online events? I mean, it seems like there's so many options out there for marketing, for getting word out, but that by the time you get to it, everything, at least this is the way I feel about it. Sometimes it gets so diluted because how did you pick your path and your way of going down, your way of doing it online rather than in person?
So it actually came from failure. Mm-hmm. We were planning a different type of event in Houston. We call it the Build Your Legacy event. We're bringing in asset protection and attorneys. We're going to do this event, and I dropped about $35,000 in marketing, and nobody registered. I may have had 10 ticket sales for an event. And usually when I did a workshop, when it was a note workshop, we've had 80 to 100 people, at least 50 show up. Mm-hmm. But this was just a huge failure. So we literally pulled the plug on it. I said, I can't do this. I'm not going to spend more money, good money going after bad money. And so I was literally depressed. Yeah. And my VP of operations, Stephanie Goodman, and I were driving to Dallas for an event, to network an event or going up there for something. And we had been doing regular webinars. Monday nights, we've been doing a webinar for almost a year straight every Monday night and hit and miss. And then we were getting 200, 300 people on a webinar. And we were like, why don't we just do a web-based event, mm-hmm. And we're like, well, let's give it a try. And so 3 August ago now, I guess, we're like, okay, let's do our first online event. Let's see how it's going to work. And I literally had my staff, I had people, my sales people like, oh, it's not going to work. It's going to fail horribly. You can't do that. Nobody's going to get online. Everybody wants to be in person. I said, okay, great. Let's just try it. It's not going to hurt anything.
Yeah. Certainly not $35,000 worth of.
Yeah, exactly. So we decided to do it. We ran it through GoToWebinar, if I remember correctly, and we just did it. We just made them like day-long webinars with breaks, and we got the speakers to come in just like this. Speakers loved it because they didn't have to travel. They could still be in front of the camera. Our vendors didn't have to haul their booths out and all that swag. They could still get in front of everybody. And we had like 75 people, and we had a 95% attendance ratio.
Nice.
And if you've ever put on an event, you had 95% of people show up to something, that's unheard of.
Yeah, that's big.
And so I was like, oh, done. So we literally canceled the rest of our hotel-style events. We had 3 more scheduled for the year. laid off my sales staff who
Yeah.
were traveling events, and we we just basically made a pivot and went with it. And then the next class we did, we had 110. The next class that we had 160. After that, we decided to do an online convention and take it one step further.
Okay.
And so we did a convention called Note Camp, focused on content, actions, marketing, and profits.
Oh, nice.
And we had 330 people show up to that. We did one 6 months later. We had over 700 people show up. And so we just said, let's go, let's use the technology. And it's really very simple. We use Zoom, which is a different type of like webinar service. We use webcams. Literally what you're filming here right now is basically what we do, how we do our workshops.
And how did you get people to that point though? I mean, things like, I think of LinkedIn or Facebook or Instagram, all of those. Did it take a lot to kind of formulate the plan? Did you have a team? How did you pull that together?
Honestly, did most of it just our own marketing, because we've already built a tribe, a following from us doing emails on a regular basis and doing stuff on Facebook. I'd grown a Facebook group, Facebook profile to 35,000 followers. We had 4,000 or 5,000 people on LinkedIn. And so we just started, I'd spent some time diving into Facebook algorithms and Facebook marketing and said, okay, if I spend $1,000 in marketing ads, is that going to drive ticket sales? And it did. And so I took some time to really dive in, and I went to a couple marketing events. There's a big marketing event down in San Diego put on by a company called Digital Marketer, which is out of Austin. And they have regularly, 4 years ago, 3 years ago, they had 3,500. This year, they'll have over 7,000 people at a 3-day event.
Oh, wow.
And so I went to one event and I just talked to people who were doing, regular webcasts. It was kind of new back 3 years ago, but now it seems a lot more people are following our lead and doing it. And, imitation is the purest form of flattery, I guess you could say. Yeah. Because we brought some of our educators on and some of our fellow speakers. Oh, come on to my event. And I'm like, oh, this is really cool. Well, then they turn around and do their own online event, which has been interesting. So
excellent. Well, and you've also started a podcast maybe about, was it 6 months ago roughly? Yeah.
Well, we took our online thing to a little bit more different aspect. I talked to somebody, I think it was Kevin Harrington, one of the Shark Tanks. I was visiting with him at an event, and he was talking about how video's always been the wave. And I was thinking about how he got started years ago with video being brand new. And because you can do anything you can stay in touch of, like an ad or something in front of your audience. We started doing Facebook Lives over a year ago. And the idea was, let's just do a daily little, the day in the life, what are we focused on today? What are we doing today in our business, so people could see that we do, we talk the talk, we're not just walking it. Yeah. And those would range from 8 minutes to 75 minutes and stuff like that. So, anywhere in between. And we did it consistently for 9 months and had a lot of people, I love these daily things. We take the video from Facebook Live and throw it on YouTube or throw it on Vimeo, and we get more hits off of that. And people grew to kind of miss it. If I didn't do one because I was traveling, I get text messages, hey, did I miss the show today?
Yeah, that's great.
And then we had a friend who had started a podcast. He was doing it once a month, and his podcast guy, I met with him and was talking about it. And he's like, you really need to do a podcast. And in the note space, it's a very niche. It's not a fix and flip space. It's not a hard money loan space. We're kind of a niche out there. And there's a couple other one's a lady in Orlando who does one. It's like 26 episodes, does it once a week, once a month. There's another couple guys that were students of mine that started a podcast that do it once every 2 weeks, once a week. They've had some success with it, but we decided let's do one. We'll do it basically Monday through Friday, and
it's called the Note Closure Show podcast.
Yeah, Note Closure Show podcast. We have it says episode 210 we filmed this morning, but we can include the 150 episodes that we filmed before on Facebook Live beforehand. So we're on our 60th episode of that. We'll go over.
There's a lot of good content in there.
Yeah, we bring on speakers. We just had you on as a guest, and we had some other people on. We do a variety. We bring on some speakers, investors. We also spend a lot of time on the education side of what we're doing. Because this next year, literally, if it's not going to be solely note focused on an event or something like that, we're probably not going to travel to it. We're just going to do. We've invested heavily in the online aspect of things. It's paid off. It's a lot cheaper. The overhead's a lot less. I can do a lot more here from the comfort of my own office, or the house, wherever I'm at. And it's easier to get the word out to everybody, because whether you like it or not, we're in an online society, and it's not the TV these days. This is the TV of today, your cell phone. So anything you can do where it's straight to their cell phone, straight video to it makes it a whole lot easier for everybody.
Well, and for somebody like you, I mean, I love the passion, the energy, the excitement. I mean, you're able to really keep that energy up and keep things going. And so methods like videos live or the Zoom, the podcast, all of that, I think is a great way for you to be able to do it. It's obvious that you have passion for teaching, for showing people how to do things. And so I can imagine that you really enjoy that part of it too.
It is fun. I mean, I'm already planning something for like Social Media Day, June 30th of this year, 24-hour nonstop podcast for 24 hours.
Yeah. Wow.
But I get excited because I see so many success stories, and it's so much easier to get the word out via using the platforms that are out there. I mean, don't get me wrong, there's a lot of things with Facebook and other things that can be negative, especially with the elections and politics. We just try to avoid that. We try to be focused on kind of our circle, our tribe, and share what's going on. And a lot of great success stories come from that.
Great. And so the people that you work with mostly, is it people who are looking to buy notes, performing, non-performing notes? Is it people who have money to invest, or people who are selling notes? Or, I mean, it must be a combination of those, but how would you describe your audience?
So our audience is kind of a combination of those three. First and foremost, we're buying notes directly for our own portfolio all the time too. We'll close on a couple hundred assets this year. We've helped quite a few of our students close on deals for their own portfolio, where they're buying the non-performing notes to then try to work it out, get it reperforming, have a good yield, or if the borrower doesn't work with them, then they'll foreclose or do some other exit strategy to liquidate the property. We do deal with a lot of banks and hedge funds. We've got a big database of those that we reach out to on a regular basis that will provide us lists that we can cherry pick from. You know, if something's not in our sweet spot or wheelhouse, we'll let it go and move on to the next thing. And then, of course, we have a lot of other investors that have been through our workshops, and they're either working full time or they just don't have the time to do it. So they would rather stroke a check and invest with us in a couple different ways.
And so one of the benefits that you have, I believe, is, I mean, you've closed over 450 projects, I think you had said earlier.
Yeah, we'll close over on a chunk of I bought over $500 million in debt.
Yeah,
in the last few years.
So
it's a little bit. I mean,
so with that means probably that you have the ability to get a lot of deals that other people may not be able to get, because you have such a proven track record. You have the ability to perform. You've proven that you perform.
Our biggest goal is, when we buy a note, is not to try to foreclose unless we have to. So we do a lot of due diligence. We got an amazing team, amazing staff that does a great job of scrubbing these lists that we get and finding the assets that are occupied, the power's still on. The borrower's made some sort of payment in the last 6 to 12 months. Rent rates are higher than their mortgage payment is, so they can stay in the property or reinstate with us. And so we do a lot of diving down into these lists, and we also spend a lot of time contacting individual mortgage bankers and banks that are off the beaten path. I mean, notes are kind of a hot target because that's where a lot of the deal flow still is, with HUD and Fannie Mae selling more debt than REOs. So we get a lot of REO refugees or lazy landlords that come over our side that don't want to do all the work, and they're going the low-hanging fruit, the FCI exchanges, the things like that, trying to find it.
And even fix and flip contractors, borrowers, developers, I'm sure.
Oh yeah. So we are constantly out shaking the bushes, finding deals.
Yeah. And so with that, the how do I say this? It's the initial thoughts, and this is something that people have told me, well, what do you do? It's non-performing. You got to foreclose. I don't like the idea of foreclosing. It's too complicated. So two things are. One is it's too complicated. That is where your training comes in. Number two is there's something like 14 or 17 different ways, specific ways of working out a note that may not be performing. And so can you just touch base on those two things?
Yeah, the first thing is there are a lot of moving parts, and every note deal is a different story. All right. And there's about 10, 11 different strategies that we end up going through, whether it's reinstatement or modification or cash for keys or let somebody else assume the loan, or there's a whole prove a short sale. Foreclosure is our least favorite strategy. And the beautiful thing is there are vendors and servicing companies and attorneys that handle that all for us. It's not me showing up to court unless it's a rare circumstance, but plenty of vendors that help assist people with it. And that's what our classes are called. We have a workshop we've called for years, No Buying for Dummies. We start you with the A to Z's and walk you through that. But the thing to keep in mind with a lot of that stuff is everybody's in the debt game, where they believe it or not. Everybody's in the paper game. If you're paying on a mortgage, paying on a car payment, student loan, credit cards, if you're paying on, you're in the game. You're just on the opposite side of where I'm at.
Yes.
And you get that. I mean, I love it. You're doing a tremendous job being the lender and taking other things and making things happen. So it's the same game, just a little bit different wrinkle to it.
And so if somebody's getting started in the business, they want to get started, and maybe first of all, would you recommend performing first over non-performing, or does it really depend?
It depends. It sounds like a diaper commercial. Depends. Because if you don't do the right thing, you will end up wetting yourself. But what I'm trying to get is it depends on your strategy and what you have time for. It depends what type of returns you're looking for. Now, if you've got some money and you're working full time and you don't want high returns, and I'm not. A lot of people love getting their lazy asses to work, making an 8 to 12% return on performing note, and there's nothing wrong with that. That's a great thing. Plenty of lenders out there have performing notes and you get off their books. Investors like me that have bought non-performing and got them reperforming are looking to sell them off as performing or reperforming assets in 12 months. That's a great way to do it. It all depends on what you're looking for. We got plenty of friends, investors. Hey, I want to make 8 to 12% of my money. I don't have to do any work. I just collect a check, see a statement. That's what I'm good for. We have other people that are a lot more aggressive that want to make a high return, and that's where the non-performing debt can be very attractive in that point, because you're buying a note that's distressed for a variety of reasons. It may not always be the borrower's fault, too. I've been a distressed borrower before when everything happened in 2007, 2008.
Sure.
I think a lot of people have. And so buying that debt at a fraction of what's owed gives you a lot of flexibility to work with a borrower to create a win-win. And when you look at, say you bought the note at 40% of what was owed, and let's say it was at an 8% interest rate. Well, now just a loan, you're seeing, if you get it reperforming, get them to reinstate and be flexible on what they owe back payments, you may see close to a 20% yield on a reperformer. And if they don't work with you, then you always have the right to foreclose and take the collateral back. Well, if you bought that note at 50 cents of value, you've got a 50% upswing or 40 after foreclosing costs and things like that. That's a phenomenal return in 12 months or less. So lots of options. It's just that there's a lot of moving pieces. It's different than the fix and flip where you go out and touch it and feel it and buy paint and carpet for it. This is in an area where the pen literally is mightier than the sword.
Yeah. And for the analytical type, like I am sometimes, does a student of yours, when they come in, is it pretty much step by step learning how to do the process? To me, that's what I always like to see is steps and results and all of that. Can you explain what that process looks like?
Yeah, we go through a lot of the nuts and bolts, and you can't learn everything in a 3-day workshop. Okay, we do provide plenty of checklists. We've got plenty of sample forms. We give contracts. One of the beautiful things about what we do is once people go through a workshop, we like to throw them into an online Facebook group, so that they can interact with our other students, ask questions. Not only just of me, I don't want to be the slow point. We throw them on we've got a Facebook group that's just dedicated to our students, that they can ask questions, a lot of interaction going back and forth there. We also bring on a lot of vendors with our workshop. So they're talking to a servicing company during the servicing company's talking about the different strategies. They're talking to a foreclosure attorney. They're talking to an entity's attorney about what to set up, things like that. They're talking to an IRA company on ways to market to raise capital and things like that. So we really try to get as much as we can into 3 days. But there's always follow up on things. This is part of the reason we started doing regular webinars on Monday nights to provide additional coaching to people out there. And now we've done it. I think we actually own Monday night in the note industry. We call it Note Night in America.
Yeah.
And we see 200 to 500 plus people on those webinars on Monday nights on different topics.
Mm-hmm. And just briefly, how do people reach that? Like if they wanted to?
Really, so if they want to register for our webinars, really easy. All you've got to do is pull out your cell phone and text the word NIGHT, N-I-G-H-T, to the phone number 72000, 72000. So NIGHT, N-I-G-H-T to 72000. They'll send you a link that you can get registered for the webinars, or you can catch all of our videos by going to weclosenotes.tv. So you go to weclosenotes.tv, that'll take you to all our recordings, and then you can always check us out on our website, weclosenotes.com. There's always links in there for different trainings and our social media sites and things like that.
Yeah, and we'll put that in the show notes, so anybody who's driving, don't worry about it. We'll just go to iTunes, Stitcher, SoundCloud. You'll see the show notes where all of those links will be included. You're working on a fund, another fund right now?
Yeah, we're working on getting our Reg A approved here.
Yeah, do you mind just doing a brief description of what that is?
Yeah. I'm glad to talk a little bit about that. It's a fund focus, buying on distressed debt, buying larger pools, stuff like that. Depending on the investment amount the investors are putting in, there'll be a little bit different preferential rate in the front end, somewhere between 6 and 10% on the front end, and then a share of the back end. A net of profits around 25-30% of the back end profits once we do the workouts and foreclosures and sell-offs and things like that. So
the goal is to allow investors that otherwise wouldn't have access to this type of more sophisticated type of a pool of investments to be able to get into.
Well, it is for that. Another thing, though, is that we see portfolios that we've been able to cherry pick for years, and we like to carve out a chunk of what's available. But with us being able to buy more, we can get better discounts in bulk when we're buying not just 10, 20 assets, but then we go to buying 500 assets or 100 plus assets. It meets for a lot better price, and it gives us the opportunity to spend time working them out and then really getting people involved in things that they wouldn't be able to. Part of our strategy is we're going to be buying a chunk of it and looking to liquidate a chunk of it as well immediately, just to do a recap of our capital. To help out with that. But it's been, we've bought a lot of debt for the last couple of years, and we see there's going to be an influx of it. If you look at where the markets are at, there's still about 5 million homes that are still underwater across the United States from back in 2010 at the peak. And a lot of the loan modifications, the home affordability modification program, the 3 million plus of those loans are in default as well. They were fixed interest rates for 4 to 5 years, and now they're starting to adjust. We're seeing those default at roughly about 50-60%. So it's a whole other shadow inventory or second wave hitting, and then you add in and combine the commercial markets, the default rates with a lot of that stuff too. So things can't keep going up. It's got to do a correction. You and I both agree on that. Yeah. Where it hits or how it hits, I wish I had a glass, crystal ball to tell, but I really believe the opportunities be going bigger in 2018 for investors.
So there's still plenty of opportunity out there.
Yeah, there is. And one of the big things we love seeing is a lot of our students are buying closing deals. We've got students who've closed 100 plus deals, 300 plus deals last couple of years. A lot of our students are closing 20, 30 individual note deals, making good returns in their first 12 months of knocking things out. And so there's a lot of opportunity, whether you're a small investor, 25, 50 grand to invest, or you don't have any funds, but using other people's money, from IRA companies or self-directed IRAs to facilitate and borrow that money to go out and buy something at a substantial discount than an REO investor is, where they're paying 70-75% of value. I just don't see the financial sense that makes sense with a lot of the REO investors overpaying for property.
So it's obvious that you've got passion for the business, passion for teaching, passion for the note business. What's another big passion of yours in life?
I'm a big sports fan. I was fortunate enough 2 years ago to travel and hit about 22 out of the 30 ballparks across the country. We love helping. We've had a big passion for our military. Any of any veterans out there, or current or past service men and women. We comp into our workshops, giving them an opportunity to kind of, pivot on where they're going in their new careers, stuff like that, trying to help them out. We just love, we've, donated a lot of money to Make-A-Wish. We've done a lot of money to Toys for Tots and things like that. We like to help whenever we can in different facets of things like that. We've toyed with starting a nonprofit here for some specific things, but we like to be as focused as possible. I turn down a lot of things, and the ability to say no may not be easy at first for those that are getting started, but it gets easier as you get going, and it becomes a lot more profitable to say no than to say yes a lot of times.
Yeah, no is a powerful word.
Yeah.
Yeah. And 5 years from now, where do you see yourself?
5 years from now, I'll be 45. I always said that I wanted to have the goal of having 400 or 500 assets that were sending in money, $500 a month to us on a regular basis, and that would be awesome. And that's awesome. We're well on our way to hitting that goal by that time. But it's hard to say. I've recently got the bug that I probably want to live somewhere in the Caribbean. Ooh. Since we do everything online, as long as I got good Wi-Fi, I can still be doing the same things, but from a beach, right, with a cold beer in my hand and my toes in the sand.
Right. Maybe you can join us in Puerto Rico.
I spent this last April and May, we were down in Puerto Rico for about 10 days and really enjoyed it. I think there's a lot of opportunities. It's just a matter of doing things at the right time. I know that you're doing a lot down there. Your son's helping a lot down there with FEMA. We talked about that before. The good is that we've donated some funds down there. We've got some friends that are in business down in Puerto Rico. It'll be interesting to see what happens with the island in the next 12 months with the USA bailouts and things like that. Hopefully, at the 51st state, I think it'll be a lot more attractive at that point. But there's a lot of opportunity there. Just got to know where to strike and when to strike.
Exactly. Great. So if people want to reach you again, maybe could you just give details on how they could reach you?
Yep. I'll slow it down because I know I get excited and speak fast. The easiest way to get a hold of us is just go to our website, weclosenotes.com. You see above my head there if you're watching this, weclosenotes.com. You can check us out there. You can check us out online by looking just for Scott Carson on Facebook and things like that, or on LinkedIn. But weclosenotes.com. My email is really easy, scott@weclosenotes.com. And always glad to hear from people that are investors, always trying to find a way to, make something happen. Our biggest passion is helping other investors avoid mistakes along the way. And if we can help in any way, we're glad to do that.
Very good. Very good. Well, Scott, this has been a real pleasure. I appreciate all the good information you've given us, and definitely looking forward to continuing working with you. It's always been a lot of fun. Your energy, your excitement, your passion for the business, and your knowledge in it it definitely shows. And it's been great having you.
Thanks, Tom. Appreciate you. Same way here. Same from you. But I love seeing the growth and everything you've accomplished for the last 10 years. And definitely, when you need some pointers for doing some more marketing, you let me know. I'm glad to help.
All right. I'll take you up on that. Thank you, Scott.
Thanks, Tom.